Hi, I'm Max Keiser. This is the Keiser Report. Well, Stacy, the powers that be seem to be getting a bit nervous.
Yes, we're starting to see some nervousness because people in the elite in the Beltway of America are starting to realize that Max and Stacy were right, as we keep on saying, because, a lot of the headlines in the news today are reflecting what we've been warning about or saying or predicting might happen over the past 10 years. Well, this is from the Washington Post, and their editorial board wrote this: Bitcoin's boom won't dethrone the dollar, but that doesn't mean there's no danger. Really, it won't dethrone the dollar, they say. And it's like, at first, there's a few paragraphs of just really old FUD that you and I have already experienced many times.
Oh, yeah, they're getting nervous. And, for these types of editorials to appear, it marks the beginning of a new phase where the folks that are in charge, the elites now, as they're called, are starting to wake up to the fact that the world order that they've grown up with is being challenged by a direct threat to the U.S. dollar. And, of course, I like the way this editorial sets up by warning people at the beginning of it, don't worry, the dollar is safe. And then they go on to say, well, actually, it might not be that safe. And I expect to see the same editorial written in all the liberal elite media outlets in the United States and around the world. Because remember, Bitcoin is taking down the fiat world globally.
And it's important to remember the exorbitant privilege of the US dollar is only an exorbitant privilege for a very small percentage of the population. The vast majority of the population do not benefit, do not gain any privilege from the US dollar as reserve currency. In fact, they lose. That's why you have mass deindustrialization across America, is exactly because of the US dollar as a reserve currency. So most people don't benefit from it. But here, the elite sense they are about to lose their exorbitant privilege. And I'm going to read two paragraphs that you'll see clearly they're very, very worried and almost begging Janet Yellen at this point, the last bastion between, the Fed's already destroyed the dollar. And now they're like hoping that Janet Yellen can do something. So in public policy terms, the best reason to focus on Bitcoin's rise is what it tells us about the risks that may be bubbling up amid the Federal Reserve's commitment to zero interest rates. The justified purpose of that policy enacted due to the COVID-19 outbreak was to counteract economic collapse by encouraging investors to risk their money on job-creating activity rather than park it in government bonds. Given limited opportunities for productive investment, though, many have chased yield through speculative vehicles, Bitcoin very much included. Of course, there's been no investment in jobs for decades. Like, that's an absurd thing of like that anybody in the elite could sit there and think, well, if we only cut interest rates and we'll have more jobs, people will produce more and, invest more in the economy. Like when have they ever done that in the last 25, 30 years? They haven't.
Not at all. And this idea that zero rates appeared to fight the COVID is also fallacious. Zero rates have been in play for more than 20 years. The Greenspan put, which is the equivalent of a 0% interest rates, went into effect in the 1980s under Reagan. And the express purpose is to, as you point out, a very small minority of the exorbitant privilege of having world reserve currency, US dollar, benefit by zero rates, and they have for decades. So that article is replete with misstatements and obfuscation.
Right. And of course, we've covered before that China itself doesn't want the reserve currency. They're happy for the United States to do this because they know it's easy for the elite to sell out the mass for this, but it destabilizes the society. And that's why China doesn't want to have the reserve currency. Not that they even could, who knows. But right now, we are in a quagmire. We are in a global quagmire. And that's why we keep on referring to the fact that the IMF itself is the one that called for a new Bretton Woods. So here, however, the elite with the exorbitant privilege, all of the privilege of the economy, including the exorbitant privilege, they go on to say, for some, in fact, it would be crazy not to hedge against zero rates, which are actually less than zero when adjusted for inflation. Tesla boss Elon Musk was quite candid about this. Quote, "When fiat currency has negative real interest," he tweeted, "only a fool wouldn't look elsewhere. And Mr. Musk, whatever else might be said about him, is no fool. Nor is Treasury Secretary Janet Yellen, which is why she pledged on Friday to keep a close eye on Bitcoin and other speculative phenomena. We urge her and other regulators to heed what these markets reveal about the real-world consequences of current monetary and fiscal policy, positive and negative, intended and unintended." So they're picking up exactly what we had said only a few weeks ago on Keiser report, that Bitcoin is revealing the truth of the situation all around us. You know, the most participants in this economy get is Fed speak, right? Which tries to obfuscate. And of course, the Fed speak is intended to keep animal spirits alive and just keep consuming, keep buying. So this is revealing the true state. And that's what people are concerned about, who are in the exorbitant privilege class.
Right. What did Christine Lagarde mean when she said Bitcoin's offering an escape valve?
Yes.
Right? So what Elon Musk is doing, he's escaping these negative interest rates, these 0% interest rates, by buying Bitcoin. Same thing with Michael Saylor, who kicked off the trend in the CEO suites of corporate America. And the fact is, as we've been saying now for 10 years or more, that capital will always flow to where it gets the best return. That's a law of nature. Just like the sun rises in the east, capital will go where it's treated best. What we've had in the last 25 years or so is collusion on the global central bank level, who kept interest rates low and offered no competing rates anywhere else in the world. And Nomi Prinz writes about this in her brilliant book, Collusion. But Bitcoin came around and offered that escape valve. And now there's no putting that genie back in the bottle. Now there's a way out of the collusion and the 0% interest rates. And what started as a trickle is becoming a torrent. It's becoming a tsunami moving into Bitcoin.
And I think it will, for society as a whole, get better once this is unleashed, because of the gaslighting that happens, whereby you're told that there is no inflation, it's all in your head. That's a really negative consequence to individuals, families, communities, cities, the entire nation state. It's telling you that what you see in front of your face, what you experience all around you every day, is not real. That's the definition of gaslighting. It's to undermine your faith in the system around you. So where did the loss of faith come from? Like, who's the one that caused it? You know, it's this sort of Fed speak. Maybe their intentions were fine. They were trying to make sure everybody didn't panic and there was no irrational fear, and so they kept on overstoking the exuberance, and that's the only thing that they felt good with. And so eventually you end up in this situation where it's all dishonesty, and nobody, even the people at the top, don't know what is the honest truth. And you could see that in that editorial from the Washington Post, is they're starting to doubt, is like, are we really not benevolent deployers of this exorbitant privilege? Don't we care about the people? They're starting to doubt their own reality.
Right. That's Charlie Munger, the partner of Warren Buffett, said, "Show me the incentive, I'll show you the outcome." So when it comes to, was it benign or was it purposefully done to ratchet rates down to 0%? Fact is, it does benefit huge corporations fantastically who used all that cheap money to buy back their own stock and award themselves executive stock options that were guaranteed to increase by 10, 20, 30x. And that's where all the wealth in America has come from, gaming the system. And now it's time to put the toys back into the toy chest and let markets do what they do.
Well, you know who saw the last break in the matrix of the financial system and the exposure of a flaw in it where he could make money? The Big Short, Michael Burry. So he's back, and of course, signaling something in his tweets that is the underlying cause of this and what everybody's starting to sense. Just like any collective of people, group of people, mass group of people, we all sense what's coming. And he was talking about hyperinflation in Weimar, Germany. Everybody's talking about Weimar lately. And that's because everybody senses exactly what happened then in terms of a great power losing control of their monetary value. And he points out that, in particular, in general, I'll say that like the sudden collapse, the hyperinflation moment, happened just as Max and I have said several times now over the past few years. It happens suddenly, but it's happening slowly first. He points out, he catalogs that it was in fact going on for 9 years before a sudden collapse. So and everybody, there are quite a few people that seem just like, remember last year, 2020 in America, all those billionaires, how much money they made, like enormous amounts. That's exactly what you saw in Weimar Germany leading up to that short, brief hyperinflationary moment. I'll read you one of his tweets here. The life of the inflation in its ripening stage was a paradox, which had its own unmistakable characteristics. One was the great wealth, at least of those favored by the boom. Many great fortunes sprang up overnight. The cities, however, had an aimless and wanton youth. Prices in Germany were steady, and both business and the stock market were booming. The exchange rate of the mark against the dollar and other currencies actually rose for a time, and the mark was momentarily the strongest currency in the world on inflation's eve.
Right. This is since Weimar Germany, there's been a lot of work done in what's called chaos theory and systems analysis. So, and the idea is which snowflake starts the avalanche.
Yeah.
In other words, the avalanche is already, the energy of the avalanche is stored on the side of the mountain. When all it needs is one snowflake to release that catastrophic energy.
Yeah.
So here you have the energy of hyperinflation is already stored in the system. It's already there on the form of the Fed's balance sheet. They've got trillions and trillions and trillions of paper that is going to come out in a flood. And suddenly this will happen globally. And suddenly purchasing power and confidence in the currency collapses, and you have a hyperinflation.
Yeah, and here's his final conclusion to this. And what he's saying is 2010 to 2021 is exactly the same period. So he's saying throughout these years, the structure was quietly building itself for the blow. As you said, the side of the mountain building up the snow. Germany's inflation cycle ran not for a year, but for 9 years, representing 8 years of gestation and only 1 year of collapse. Written in 1974, this book that he's cataloging, RE 1914 to 1923 was their inflation and then hyperinflationary period. And for America, 2010 to 2021 is the gestation. So just like we've predicted, 2021 is, according to this, if his analogy is right, this is the blow up year. And we predicted that it might not last. The dollar might not hit 50 years old, which is August of 2021.
Think about this, Stacy. What if Bitcoin is not the bubble, but the pin? We'll be back after this. Don't go away. Welcome back to the Keiser Report. I'm Max Keiser. Time now to go to Mark Valek of Incrementum. All righty, Mark, welcome back.
Hey, Max.
All right, Janet Yellen says the U.S. government did not spend enough last year to counteract the downturn. However, money supply did increase by 25% in 2020. How much money printing is going to offset this imploding Ponzi scheme? Mark.
Well, if I knew that. So Janet Yellen was put into the position of Finance Minister of the United States. It's called, I guess, Secretary of State, if I'm not confused. And this is quite a symbolic act, I think, because as she is a formal head of the Federal Reserve, she knows, I guess, that this Ponzi scheme has to be sustained, and she's obviously a full-fledged Keynesian, and now she's in the position to do the politics which actually are needed to keep this going. And I totally agree with your implied question. This system needs more spending, otherwise it will implode, and I guess it's a lot more. I don't know if we will need 4 trillion this year as annual deficits, or would it be rather 5 to 6 trillion? I would guess it would be somewhere in this area.
Right, but the other tragedy here is that she seems to equate money printing with somehow managing this catastrophe and doesn't seem to understand that the money printing caused the catastrophe. She seems to have some circuitry in her mind over there as Secretary of the Treasury inoperable, malfunctioning. She's malfunctioning as a government bureaucrat. And this is, and we have a president who also seems to malfunction in their head. You know, legendary hedge fund investor Stan Druckenmiller says he is now very, very short the U.S. dollar. So he hears what Janet Yellen says, and he thinks he's going to go very, very short the U.S. dollar. He cites the money supply growth as the reason. Does the dollar survive to see its 50th birthday this August, Mark?
Ooh, it's coming up, yeah, pretty soon, and I guess it will survive it still. Question is, going forward, what kind of form will it take, and will it obviously be less and less important on the international stage as reserve currency? But yeah, I would say it will be around for as a medium of exchange in the short and perhaps in the medium term too. However, you frequently bring up the valid points that people are more and more questioning the status quo and also questioning the dollar as a reserve asset. And I think this is going to be very important in this decade. People
are talking about we're entering into a Weimar Germany-like period of hyperinflationary collapse for the US dollar and other fiat currencies. Over there in Liechtenstein, a mere stone's throw from Germany. And you are an academic, a scholar, a monetary historian, a gold expert, a Bitcoin expert. Are these worries unfounded, or do we see the beginning of this type of Weimar Republic-like hyperinflationary collapse, Mark?
Well, I said last time I was on your show that I'm definitely in the inflationary camp, and I'm sticking to that call. I think since summer, when the last show was, when I was on the air, the indicators have, more indicators point to this scenario, actually. I mean, just look at the commodity prices, they're rising. Look at all kind of different financial indicators, bond yields are rising. So I think we're getting closer into an inflationary scenario, but hyperinflation, I think, still is a few steps away, since hyperinflation requires quite a few things at the same time, basically. Hyperinflation in Germany was a very, very extreme case. I wouldn't rule something like that out in the long term. Perhaps even in the medium term, but in the short term, I think we are still far away from such an extreme scenario.
Well, one similarity that people are pointing to is during that Weimar Republic days, because the currency was collapsing, there was huge speculation in the stock market. So the stock market went ballistic. Obviously, gold went from 1-to-1 ratio against the Reichsmark or the Deutschmark at that time. It ended up heading to 1,000,000,000,000-to-1. So the people who were owning gold certainly were protecting themselves. But there seems to be a mad dash and speculative fervor in things like stocks and property. And this is how people are sensing. And isn't it true, Mark, that hyperinflationary collapse is really loss of confidence in the currency? That's what it's really not an economic phenomenon so much as people just lose confidence in the money, and they're like, you know what, this money's not worth anything, and they try to get rid of it as fast as they possibly can. Isn't this rally in the stock market kind of pointing to this speculative fervor? The stocks are certainly inflating at a rate that would suggest that people have lost confidence in the US dollar, Mark.
You're right, and the great Ludwig von Mises called exactly this phenomena Katastrophe, a kind of catastrophe bull market. And I think in that sense, we are seeing some kind of indications that this is going on. I don't know how bullish the average investor really is in his heart. I think he's sensing things, what you mentioned, the loss of purchasing power in dollar. Or all fiat currencies definitely is a big factor when it comes to investing. It doesn't even matter if one decides to put one's capital into Bitcoin gold or equities for that matter, but I think people are really aware of the fact that the purchasing power is melting, and so they have to do something if they have some savings. And I think to that extent, we are seeing some kind of Catastrophe. One could argue that. Agreed.
You know, another interesting parallel, if you go back to the preceding the Weimar Republic, you know, you had the Versailles Treaty and the reparations that were applied to Germany that were onerous and draconian and set up a train of events that were catastrophic. You know, we have something similar in America in 2008. Obama forced the public to pay reparations to Wall Street, to pay reparations to Ben Bernanke and Citadel Capital and Ken Griffith and all those hedge funds. And we, the taxpayer, had to pay $15–16 trillion in reparations after the 2008 crisis that was caused by the very same hedge funds. Is that a fair analogy in your mind?
Well, it may be. In fact, it's perhaps a little bit of a stretch, but yeah, the system requires more and more debt, and I also think that Keynesianism basically is tries to perpetuate this debt-based monetary system. I think it's the function. Well, Keynes perhaps implicitly realized that one needs, the system needs more and more debt, and that's what these people are doing. They're loading up on public debt, and they're also trying to incentivize the public and also the corporations to take on more and more debt. Because if they wouldn't do that, as you mentioned in the beginning, this whole debt scheme would implode. So we are really trying to keep it going as long as possible. And at the end of the day, we'll probably see some kind of a revaluation in various real asset prices. Bitcoin obviously is already on the forefront of this. But I think with Bitcoin, you have some kind of monetarization factors, but also gold and real commodities will have to reprice relative to this whole fiat money amount tsunami which is being printed.
So let's talk about gold. It hit a new high in 2020, but it's been choppy ever since, kind of fell back. Despite all the money printing, despite all the lockdowns, what's going on with gold? What's your forecast for 2021?
Correct. We had the all-time high in summer 2020, and since then we're actually moving lower and consolidating. I think we're entering quite an interesting phase of the cycle because the gold is quite sensitive to yields, especially real yields. But nominal yields were slowly drifting higher since mid-2020. And generally, the expectation is that since hopefully the COVID virus is being somewhat under control in the near to medium future, that this economy will be back. I think this is perhaps similar to 2013, 2014, where actually the gold price fell because of the general expectation that the economy will be back on track. And the Fed back then was able to pull a rabbit out of the hat and was able to convince people that they will slowly stop the money printing and eventually also normalize the policy. And we will face the point, I think, pretty soon when the Fed also again has to show their cards, and I think it will be very interesting to see if they will be able to manufacture another bluff, because at the end of the day, last time it was a bluff. They weren't able to normalize, and they will have to try to convince the investment community that they are doing something, I think. But it's very, very difficult because they actually really can't because of the debt situation. So let's see what kind of rabbit they will try to pull out of the hat this time.
Well, why do gold investors even listen to the Fed? You know, the lumber hit a new all-time high at 1,000. Copper is screaming to the upside. Oil is booming. They don't seem to look at what the Fed's doing. They just buy it because they know inflation's coming.
Well, I think the traditional gold investors do not listen to the Fed because they are convinced. They don't need to be convinced anymore. But I think the marginal buyer of gold is actually probably the institutional investor in the United States still. And these people, to my knowledge, are not very highly allocated to gold. They're still underinvested. And so I think these investors need to be basically lose the confidence, and so far they have not.
All right, let me jump in here, Mark, because we're out of time. We'll hold you over for a second segment. Thanks for being on Keiser Report.
Welcome. Looking forward.
All right, and that's going to do it for this edition of the Keiser Report with me, Max Keiser, and Stacy Herbert. I want to thank our guest, Mark Valek of Incrementum. Until next time, bye, y'all.